The first mistake I want to talk about is using Tfsa as a savings account. Most people are using Tfsa as a savings account because they are scared to lose their money through investing. If you are a beginner, then I highly recommend using Tfsa as an investing account and start investing through ETFs. Unlike interest we get from savings, some ETFs pay a fair dividend. From your savings, you might be able to get around 2 to 3% interest, but an average investing return is around 7 to 9%. I will link down some of my favorite ETFs below this video. When I started investing, I took a small portion of my Tfsa savings and bought some ETFs. And later I said goodbye to my Tfsa account. I don't want to call this a mistake, rather I would call this as a missed opportunity. And here is why. I will tell you a small story. Once a reporter asked Susie Orman how much money she has invested. She responded she has around $25 million. So the reporter was curious about where she invested her money. She said, I have invested $1 million in the market and $24 million invested in bonds. The reporter and most of the people in financial community were not happy about this response. But in reality, she had 24 more million reasons than anyone to invest her money in bonds. So if you're happy with savings, go for it. If you're happy with your bonds, go for it. I just want to point out the missed opportunity. The second mistake I want to talk about is the difference between transferring and withdrawing. Let's say you have your Tfsa account through Wealthsimple, and later when National Bank started offering commission-free trading, you decided to switch your brokerage to National Bank. If you're planning to switch your brokerage, make sure to do a transfer instead of a withdrawal. If you make a withdrawal, you have to wait for the beginning of next year to get that contribution room back. And some brokerages will charge you a transfer fee and some brokerages will refund you the transfer fee as a welcome bonus. So talk to the brokerages about the fees before you transfer. The third mistake I want to talk about is over-contributing. A lot of people lose track of their Tfsa contribution. Some people make Tfsa contribution based on the information displayed on their CRA online account. The information displayed on CRA online account is only updated at the beginning of every year. So all contribution made in the current year will be reflected in the following January of next year. So make sure to track your contribution with the help of bank statement or even maintain an Excel sheet to track it. I always look through my online bank statement to track my contributions. Now let's say what will happen if you over-contribute towards your Tfsa. If you over-contribute, CRA will charge 1% tax on the excess amount. Let's say your contribution room was $6,000 and you contributed $7,000 to your Tfsa. Because of the excess $1,000, you will have to pay 1% tax on that $1,000 every month. So here you have to pay $120 as taxes for the year. The tax can be avoided if you can withdraw the excess amount. Let's say you are able to withdraw the excess amount by February 16th. In this case, you only have to pay the excess tax for 2 months as you are able to withdraw the excess amount by February 14th of the same year. In this case, you only have to pay $29 as taxes. Now let's look at how we can lose contribution room in Tfsa. You can only lose contribution room if you sell stocks at a loss. This short video can help you to understand it better.
This is how you can lose contribution room in your Tfsa account. Let's say we have a contribution room of $6,000. We bought a Microsoft stock worth $6,000. So after 6 months, the market crashed and now the value of the stock is $3,000. Even though the stock value has gone down, we still have our contribution room because this stock can make a comeback or even double it in the future. But we will only lose our contribution room if we sell this stock at a loss. So if you sell this stock at $3,000, we will lose a contribution room worth $3,000. So try to avoid investing in riskier stocks through your Tfsa account.
A lot of people have questions about what will happen to their contribution room if they withdraw the money from selling the investments at a gain or loss. This short video can help you to understand it better.
Let's look at two Tfsa scenarios here. Let's say you have a Tfsa contribution of $6,000 and you bought $6,000 worth AMC stock. And now the $6,000 went up to $100,000. So what happens to the contribution room if you withdraw that $100,000 from your Tfsa? And what will be your next year's contribution room? If you withdraw that $100,000, your next year's contribution will be $100,000 plus your next year's contribution room. If you can grow your contribution room, you won't lose that contribution room if you make a withdrawal. Now let's see what happens if the stock went down and now the $6,000 AMC stock is only worth $1,000. If you sell the stock at a loss, you will lose the contribution room worth $5,000. and your next year's contribution will be 1,000 plus your next year's contribution. And it's because you sold your stock at a loss. So try not to use TFSA to invest in riskier stocks.
I just had to run to get a haircut. I hope it's better now. The fourth mistake people tend to make is not appointing a successor holder or beneficiary to their TFSA account. First, let's talk about what will happen if you don't have a beneficiary or successor holder added to your TFSA account. If you don't have a beneficiary or successor holder, the assets in this account will be added to your estate. And if your estate is the TFSA beneficiary, then it will be subject to probate fee. The second option is to add a beneficiary to your TFSA. The beneficiary can get the money in TFSA without probate fees and taxes. But if they want to invest this money in their TFSA and if they don't have contribution room, they can't do it. The last option is appointing a successor holder. Only the spouse or the common law partner can be appointed as a successor holder. A successor holder can take ownership of the TFSA account and they can roll the account into their account without impacting their TFSA contribution. If this sounds complicated, all you have to remember is beneficiary will get the money and successor holder will get the account. Before going to the fifth mistake, let's talk about the type of assets you can hold in your TFSA. You can hold cash, mutual funds, stocks, GIC, bonds, and shares of small business corporations. When it comes to stocks, you can hold stocks that are listed on designated stock exchanges. You can find the list of designated stock exchanges on the CRA website. If you are planning to buy an over-the-counter stock, you have to make sure it's also listed in the designated stock exchange list. I own a Chinese over-the-counter stock called Tfsa in my TFSA. Since this stock is also listed on Hong Kong Stock Exchange, it's an eligible asset to hold in my TFSA. So if you are planning to buy an over-the-counter stock, just make sure that the company is also listed in one of the designated stock exchanges. You can buy shares of small corporations to your TFSA, and if you're planning to invest, make sure to go through the investment criteria. I will add the link in the description. The sixth mistake is about withdrawing and contributing in the same year. We might have already covered this topic, but I just want to add some additional information. If you are withdrawing from TFSA, you won't lose that contribution, but you will only get back that contribution in next January of the following year. So when you withdraw and contribute in the same year, don't assume that you will have your contribution back right away. That brings to my next point. If you're planning to withdraw, then the best time is at the end of the year so that you can get your contribution back at the beginning of next year. The seventh mistake I want to talk about is investing while you have a high credit card debt. An average expected return from investing will be around 7 to 10%. So if you have a high credit card debt and if you're already paying 20% interest, it's better to clear off that debt before you start investing. The eighth mistake I want to talk about is using TFSA to invest in high yield foreign dividend stocks. If you prefer to invest in high yield foreign stocks, TFSA is not a good option. You will have to pay around 15 to 30% withholding tax for your foreign dividends. So each time when a dividend is paid out, 15 to 30% withholding tax will be deducted, and it's better to hold foreign dividend stocks in RRSP as withholding tax is not applicable for RRSP. As you probably guessed it, day trading or swing trading is the final mistake I want to talk about. CRA does not allow day trading in TFSA, and CRA does not have a timeline on how long you should hold on to an investment. To be on the safer side, try not to overtrade as it might trigger a CRA audit. Hope you enjoyed this content. Thanks for watching. If you have enjoyed the content, consider liking and subscribing.